What is going on, investors? Hopefully you guys are doing well out there. Got another earnings report after the bell today. Micron Technology, ticker symbol MU. Thanks for the viewers that suggested we cover this one. This is the first here on the channel. So they just reported earnings after the bell. They also gave guidance for the next quarter. We'll take a look at the quarter revenue, take a look at the profits, compare that a little bit to the outlook, see what's going on there. We'll jump over to the stock chart, see how this one's been running away from it. Maybe there's a level here where we can get this on a pullback if it happens to do that, but maybe it doesn't pull back, because right now Micron is simultaneously leading DRAM and NAND technologies, and that is a rapidly growing business because of AI, 5G, and cloud. So they're just right in the right business model right now, and investors are paying up for it, because when you come here to the price to sales ratio, it is at a 10-year high, and it might be even in an all-time high for this company. We're at nearly a 4 times price to sales ratio. Again, maybe to compare to tech stocks and Tesla and things like that, not necessarily that overvalued, but it's just something to keep in mind. But it could also mean that investors are bidding up Micron because they know the sales are just going to continue to keep rolling, because they are a market leader, and AI, 5G, and cloud in particular need their memory in order to function. Now, price to earnings ratio at 20, again, not necessarily low, but not necessarily high considering other markets out there. $86 billion market cap. Let's jump over to the revenue. I'll give you a deeper dive into it, but what I wanted to just show you really quick is in the quarter, we came in at 5.7 billion in revenue. They're guiding for 5.8 in the following quarter, upwards to maybe $6 billion. Operating expenses coming in at about $800 to $900 million. That's up slightly from the most recent quarter. And finally, earnings per share coming in at 41 cents, which is a little light. It's actually 30 cents light. So they're obviously factoring in some costs that are going to be associated in there somehow. We'll jump down to the more brass tacks details here. We've got the most recent quarter here. We've got, what I like is they show you quarter over quarter. So here's quarter over quarter, and then here's year over year. Here's our fourth quarter back in 2019. So revenue came in at 5.7, like we said. It was 6 billion in the previous quarter, but it was 5.1. So we were down a little bit quarter over quarter, but we're up rather significantly a year over year. Cost of goods sold, relatively low margin business, at least from a cost of goods sold. You see where we spent 4 billion to make 5.7. We net out, or gross out in this case, 1.7 billion. Okay, off slightly from the previous quarter where we did $2 billion in gross margin, and finally up rather significantly, about 400 million over the first quarter. So growing nicely year over year, quarter over quarter, a little soft, but maybe that fourth quarter is big. You get a lot of push through maybe into that. So take a look how they're controlling their costs. R&D, selling, general, and administrative, and we got a little bit of other here, but these all fell well within line. Okay, actually our selling and general administrative actually dropped down a little bit. You actually probably like to see that. When revenue drops, you might not have to spend as much on those types of things, but they're still spending money on R&D, which I think you exactly want them to see. That gives an operating income of 866, not too far off of the 1.1 we did in the previous quarter, but way up. I mean, that's like $350 million over where we were in the previous quarter. Previous year. And so that's solid right there. We've got some other interest income, interest expense, and that gets us down to kind of our total operating income down here at 841. Again, compares very favorably to the year before. Move it through some taxes and things like that, we get down to our net income at 803. In the previous quarter was at 988. So not that big of a drop, and almost double, not quite, but up considerably from 491 in the previous year. Just absolutely phenomenal from an operating perspective. On the balance sheet, everything looks really clean here. Okay, we've got about this 7 billion in cash. We had a little bit more than that in the previous period, but this is previous quarter right here, and this is the most recent quarter. So cash diluted just a little bit, but nothing. This is nothing at all to be concerned about. Everything looks really good there. They do have some debt on the balance sheet here. We have this long-term debt. It was at 6.3. It's up to 6.3. We do have some of it current, 270. They're just kind of churning through that. No big deal. Okay, when you have about 7 billion in cash and you got about we'll call that 7 billion, 6.5 total debt, nothing to worry about it at all. And when this type of business, this type of company, you need that kind kind of debt. Now, we've got year-over-year view on the cash flow statements looking really solid. We were at $2 billion, down just slightly here to about $2 billion, round that up to $2 billion. So basically flat year-over-year on the cash flow perspective. Their big add back here is this depreciation here. That's the biggest add back that they do in there. So everything looking good from a cash flow perspective. Now, jumping to the stock chart, this thing has been on a run. You see here, we made this big run from about November all the way up in here. I mean, we went from like $50 a share all the way up into 70, consolidated really quick, and then kind of popped up. Now we're kind of up here. So, initially, if you want to jump on this train, go ahead. I'm not, momentum trader, whatever strategy you have. I don't mind any of that. First level of pullback, though, is around, we'll just round that up to about $75 per share. That, to me, first level of support. If this thing starts walking back, it should want to take a break here right around 74.50, 75. Below that, you're right at around 70. I think you'd have a lot of it. I don't want to say a lot, but I think you'd have a significant amount of investors want to step in here. Okay, obviously the trend would have broken down a little bit from a shorter term perspective, but anywhere inside this box from 70 to 75, in my opinion, would be a solid place. Now, this thing could just keep running. Okay, it might not take a breath and come back down a little bit. It might just run up to 80, 90, get up to $90 a share, take a breath, and then just keep moving. They are in a very cyclical business, and right now that cyclical of DRAM and NAND technology and memory and things like that is absolutely on fire. Okay, AI 5G cloud is just, especially AI and 5G, still very, very early for that. And so I think they've got plenty of momentum behind them, and being a market leader is not a bad thing. So if you want exposure directly, ticker symbol's MU, you could certainly find plenty of ETFs that have probably a high concentration of Micron in it. If you want to hedge your bet a little bit with this one, because again, considering we're kind of historically high from a price to sales basis, I would assume too from an earnings perspective, probably historically high, but this company really telegraphed their next quarter pretty well, and they're really telegraphing things in terms of their outlook. So those are things that you want to keep in mind going forward, that they've telegraphed things at least quarter over quarter to a certain degree. So that was Micron. Hopefully you guys enjoyed this one. We'll be back again very soon with lots of earnings. Strap on your seatbelt. They're coming all month and next month. Hopefully you guys have a great day. Good luck with your investments.